can get. So just as an overview, the Virginia Enterprise Zone, this is a map of the localities across the Commonwealth that do have an enterprise zone. The shaded areas are the localities themselves, and the little kind of yellow highlighted are those boundaries. Of course, we have 45 designated zones that encompasses 21 cities, 34 counties, and 12 towns. Just as a review of the grant year 2024 summary, we were able to distribute or disperse over $13 million to 36 job creation grants and 117 real property investment grants. And that leveraged over $231 million in qualified real property and also 2,957 net new jobs created. And as we will remind you once, twice, maybe 10 times, that the program timeline, of course, during the 2025 General Assembly is when funds were appropriated for this particular grant year. The grant year, of course, is for calendar year 2025, jobs created and real property that was placed in service, and applications are due April 1st, 2026. This is a more detailed program timeline for the real property investment grant, as well as our review process. So again, the final place in service documentation, which we'll review a little bit later, has to have been placed in service during calendar year 2025, January through March, which is when we are currently in process of accepting the applications, the qualification determination, answering questions. All information is due April 1st, 2026. And then, of course, April through June is when our staff will be doing the grant review process, asking any questions, follow-up notifications, and then everything will be processed or should be processed in June with funds being dispersed via check. This is just an overview if you are looking for, is the property eligible? So the first website that we typically send you to is the VEDP database for enterprise zones. It has recently been updated, and so this is an updated screenshot that shows you what it looks like now if you go in. You'll see it kind of shows somewhere over here in Whitfield, just as a screenshot itself. And you'll notice over here the map layers that are available. And so the available properties has been added, available sites. You'll see this sort of yellowish highlight, and you can take a look at that. That is the available part, or the areas that are designated as enterprise zones. And then, of course, there's a checkbox for opportunity zones as well. You can check these off. I can't, of course, right now because it is a screenshot, but you could take these check marks out just to give you the outline of the enterprise zone. It is a little bit different than previous maps if you had taken a look at those before. And so it's more of an outline versus shaded area. However, it's our understanding, or it's my understanding, if you go in and you hover over that area, then it'll actually shade in. So that is, of course, maybe a first look of whether it is a property that is in the enterprise zone. We always encourage you to contact your local zone administrator. That information is available on our website to confirm if the property has been located or is located in the zone. When you're applying, we'll review this a little bit later, the local zone administrator does have to verify and sign off on that. So let's get into the eligible property types. They, of course, are buildings. So buildings is the primary type of facility or applicant that we have. Typically, they are freestanding and unrelated in function to other buildings and structures. They're their own property. They're their own parcel of land. There can be a common ownership that's leased to tenants, and the owner has no say in the general management. That could be an applicant or a usage. And that tenants act independently of each other, and the owner doesn't dictate hours of operation. So an example here, picture to the right, you'll see is these are adjacent downtown buildings. They may have one owner, but they are not of the same type of usage. And so they are different parcels, they're different buildings. Yes, they do have a common wall with one another, but that could be counted as different eligible properties because they are different buildings themselves. We also have facilities. Facilities is a group of buildings. They're typically located in a single physical location, and they are involved in related operations and designed to function as a unit. And also, they're typically under the common ownership and management of one individual, person, company, etc. Examples do include malls, businesses with multiple buildings. It could be a property or properties, because it could include more than one parcel that has a manufacturing building, but also has maybe their administrative building, packaging, but they're related in function. If you have questions about whether it's a building or facility, then of course we are always happy to help answer that. Open office hours, as Tori mentioned, we could take a look at those as well during that time. What are those eligible property uses? So the RPIG, as we like to call it, Real Property Investment Grant, is available to investors that are undertaking the rehabilitation, expansion, or new construction projects within the boundaries of the enterprise zone. So the building facilities end use must be commercial, that can include office or retail space, industrial, such as manufacturing, something of that sort. It can also be mixed use. So provided at least 30% of the usable floor space is devoted to commercial, office, or industrial usage. Okay. Who is the eligible applicant? So a qualified zone investor is any entity or individual that's capitalizing on or expensing those costs associated with that real property investment. So we do have different categories. We have, of course, property owners. That property owner might actually be the occupant. They might be a non-occupant. Please know that the property owner does have the first right of the grant if they've made that investment. There could be multiple owners of a property. The rights to the RPIG qualification should be coordinated with all the other owners of the property who have made those investments. Tenants that are making leasehold improvements, they may apply for the RPIG with the owner's permission. And of course, only if the improvements are being capitalized or expensed by the tenant for tax purposes. And developers. So rights to the RPIG qualification should be reflected in the sale documents if the property has been sold. So let's talk a little bit about the eligibility requirements, and this goes back to the threshold in addition to the maximum grant amounts. So zone investors do have to meet a minimum investment threshold based on the construction type. So whether it's new construction or rehab or expansion, we also have some lower thresholds if solar is an involved aspect of that qualified real property. The thresholds must be met each year based on for the RPIG is being applied for. Those minimum thresholds do not carry over, and there is a grant cap based on the total qualified investment. So as you'll see on the right-hand side, we have a quick look at what those minimum thresholds are for the type of construction. New construction, of course, is $500,000. Rehab or expansion is $100,000. And we do have some solar. If it's a solar only project, there's no minimum. And new construction is $450,000. That does include solar, and rehab or expansion with solar is $50,000. We're going to review that in a little bit of detail in a moment. If you'll take a look at that information on the left-hand side, the total investment itself, if it is less than or equal to $5 million, the grant is eligible for at least 20% or up to 20% of the qualified real property investment, but the maximum grant award amount is $100,000. Anything over 5 million, but less than or equal to 20 million is again calculate 20% of the amount over that threshold with a maximum grant award of 200,000. The most recent legislation in 2025 added a third tier to investment opportunities. And so now there's a third tier that says anyone or any qualified investor that invests over $20 million, that grant amount can be calculated at 25% over those thresholds listed on the right with a maximum grant amount of $300,000. What are qualified investments? So you might have heard me say qualified real property investments or qualified investments. These are hard construction costs associated with the rehab or new new construction. So this is interior, exterior, structural, mechanical, electrical improvements necessary to construct, expand, or rehab the building. This does include excavations, grading and paving, installing of driveways, landscaping, land improvements. So examples are really listed out by the type of trade here, and that's typically how it's listed on the application as well. And so examples include the carpentry, ceiling, demo, doors, windows, drywall, painting, plumbing, masonry, roofing, lead and asbestos abatement, freight, and mobilization. There is a more detailed list on page 11 of the Real Property Investment Grant Manual that is also on our website, and we'll make sure you do have those links. If you have a question, we always have things come up. It's just kind of a, would this count? Please don't hesitate to reach out. We'll be happy to look at our past regulations and help you make a determination if that is something that is eligible. What are ineligible costs? So unqualified investments do include the acquisition cost of the property and or buildings, any architectural fees, the business personal property, lots of things that we refer to as soft costs like closing cost, insurance, anything beyond the property line, legal fees, the machinery and tools that are being put in the building, furniture and fixture or furniture that's putting in the building, inspection fees, and signage and utility and connection fees. Again, those are just an example of ineligible cost. We do encourage you to take a look at that Real Property Investment Grant Manual. How do you calculate that award? I talked about it just a little bit before, but grant awards are 20% of the qualified real property investment made in excess of that threshold. So, and grant award caps are over a 5-year period. So again, this is just a recap of the amount that you are eligible up to for each investment threshold of the 100,000, 200,000, or again, that new tier of 300,000, depending on the amount of investment made. Here's just a calculation example as well. So for the rehab and expansion, if you were to invest 500,000, that threshold is of course 100,000. So your grant eligible qualified real property is 400,000. When you multiply that by 20% or 20%, then the eligible grant request is 80,000. You can see an example here for new construction, which puts it right at that threshold of 100,000 because they had $1 million investment. Here on the far right is an example of how it's been capped. So there was a rehab expansion of $2 million. Their threshold was 100,000, so they had $1.9 million in grant eligible QRPI. When you multiply that by 20%, that's $380,000. However, that exceeds the maximum grant amount, and so their grant award request would be $100,000. I had said we'd come back to solar. Want to talk about that just a little bit more. There was legislation in 2019 that allowed solar components to be qualified real property investment. What it did is it allowed the threshold for new construction with solar to be lowered to 450,000. However, the minimum solar improvements does have to be $50,000 or the minimum amount in solar improvements. It does the same thing with rehab and expansion. It lowers that threshold from $100,000 to $50,000, provided the qualified real property includes solar of at least $50,000. And then the solar only improvements, again, that does not have a minimum threshold. In 2024, additional legislation was included that allows monies to be for real property investment grant to also include solar canopies for parking lots as part of that qualified real property investment. Here are just a few examples of the calculation for solar. And so if you have new construction with solar, again, that included at least $50,000 in solar improvements, then you've got 1 million minus that 450,000, that grant eligible is 550,000. You multiply that by 20% and you reach 110,000, and that does exceed the maximum. So of course that grant request is going to be at $100,000. If we jump over to the solar only, you'll see they spent $75,000. There is no minimum threshold because it was a solar only improvement to the property itself. And so they have, if you multiply that 70,000 by 20%, then you would reach $15,000. The application process itself, and I'm going to go over this and then I'm going to turn over to Kate Pickett for finishing us up. So again, to be eligible for this grant year 2025, all property must have been placed in service January 1st, 2025 through December 31st, 2025. A copy of all final place in service documentations is a required component of that application. What are those final place in service documents? Those include a final certificate of occupancy issued by your building department. It could be a final building inspection issued by the building department, or it might be a final third-party inspection. The only time a third-party inspection is eligible is if the project does not require any permits. We have instances in localities where maybe they put a new roof on, but the roofing did not require a building permit or an inspection. And so that in itself was something that had to be done through a third-party inspection. There is more information in the Real Property Investment Grant Manual about that final third-party inspections. I highly encourage you to read that if you are in that position. And now I'm going to turn it over to Kate to talk about the application process.
Good morning. Thanks, Mandy. So let's jump into the required materials for your real property investment grant application. The Form Easy RPIG is no longer a requirement if you have applied for a grant before in the past. That was a requirement, but that was before we submitted all of the grant information online in our application portal. These are all the required materials for the grant, and we're going to go over each one of those individually in detail now. The first is the Commonwealth of Virginia Form W-9. It's very important that you have the State of Virginia, Commonwealth of Virginia form and not the IRS Department of Treasury W-9. For our purposes for this grant, it's important for you to fill out the information that's highlighted. So that's everything on the form except for the two boxes over to the right with the exemptions. And we're going to go in even more detail about the form now as well on the next slide. So to start the form, you must provide either your Social Security number or an FEIN. The Unique Entity Identifier, UEI, is not a requirement. If you are an LLC, a partnership, a corporation, or an S Corp, you provide an FEIN. You only need to provide the Social Security number if the applicant is an individual or a sole proprietor. And you'll see in the box that says entity type that you can select disregarded entity on that form. But for our purposes, for the real property investment grant or the job creation grant, that is not an option. You should not select disregarded entity. If the company that is applying is a disregarded entity, then you actually want to submit the W-9 for the company or the individual that is capitalizing on the investment, because a disregarded entity cannot be taxed. So that's why you cannot select that disregarded entity. You want to utilize the legal name and the FEIN of the parent company or the taxable entity, and note the name of the disregarded entity on the W-9. In addition, you will notice that there is a spot that says legal address and remittance address. That remittance address may be different than the legal address of the company. The remittance address is where you want to receive your grant check. Those grant checks are put in the mail and sent to you that way, and it's very important that you have the correct address for the remittance address. You might be surprised how many companies we have contact us after we let them know that the checks have gone out in the mail and they have not received theirs, and it's because they put the wrong address there. So it's really important to remember to check that. And if you already do business with the state, then you may receive your payment through EFT, but all of that information must still be completed on the COV W-9. It's also important that you print and sign your name. So that should be the contact person for the grant. In years past, we were able to accept W-9s from previous years, but we're not able to do that anymore. So it's very important that the date that's with the signature is in 2026. And in terms of your options for approved electronic signature vendors, we allow DocuSign and Adobe Signature. We also take physically signed documents. You can have them scanned and submitted that way. The first form we're going to look at is the applicant declaration form. This is a requirement for all real property investment grants, sorry. You can see that there's two sections. The first section is to be completed by the zone investor or the grant applicant, and the second is to be completed by the zone investor, the grant applicant, or the CPA. The first section is mainly the contact information for the zone investor, and that includes the narrative summary. That helps us to have a better understanding of the project in general. If you can imagine us reviewing these grants and just seeing the information that's written on the paper, having the narrative summary gives us a better idea of what the goal of the project was, where you started, and how you completed it. So you can include information on the state of the building or the facility before the project began. You can talk about the building use, the owner. You can give us a rough summary of the end goals and work and a timeline of the project. So the back side of this form is for the applicants to also fill out and to sign. And what you're signing is that you understand that you've made the management decisions necessary to complete the application, and you've examined it to make sure that it's accurate, and you've disclosed all the information that you need to the CPA. And we're going to go over that information in an upcoming slide, and that all of the information you're providing is correct to the best of your ability, and you're authorized to sign on behalf of the zone investor or applicant. The next form is the local zone administrator review form, which is also a requirement for all RPIGs. The first part is to be completed by the zone investor or the grant applicant. As you can see, it has the contact information, the name, email, phone number, physical address of the property. One question that we get often is that it also lists the property identification number. This is important to have because this is also a question or a requirement when you are putting in your actual application into the portal. Different localities call the property identification number different things. Some may refer to it as a tax ID number, a parcel ID, tax parcel number. And if you don't know what that number is, you can ask your LZA to help you find that number for your locality. The second part of the form is to be completed by the local zone administrator. And to be clear, the local zone administrator is the representative in the locality in which you're applying. That local zone administrator is in charge of ensuring that when they sign this form, they are signing that they have checked to make sure that the property is within the boundary limits of the enterprise zone. So they are going to fill out their contact information and then also sign and date this form. Those three forms that we talked about, the Commonwealth of Virginia W-9, the applicant declaration form, and the LZA review form, are all to be scanned and uploaded into the application portal. Now we're going to talk about the online application and see what that looks like and what information you need to upload. We'll go over all of these parts. This is a reminder that, of course, that submission deadline is April 1st, 2026. When you submit, you have to submit all of your documents in the portal, and all application and documents must be submitted by the deadline to be considered on time. This is what the portal page looks like. You can see that there are 3 different boxes on the bottom. The first to the left is for the real property investment grant. It does have information like the manual with all of the information you need for applying and for eligibility questions. It also has a sample application, and that sample application is really good for you to print out and fill out on your own before you submit. Unfortunately, if you start putting in information on this portal, you cannot save it and come back to it. You have to submit it all at once. So it would be easier for you to go ahead and print out that sample application, fill it out, and have all the information ready to go so that you could submit it all at once. You can see there where it says RPIG application submission here. That's where you go in to actually submit. There's all of the required forms that you need to upload, that Commonwealth of Virginia W-9, your LZA review form, your applicant declaration, and then your RPIG attestation report form. That's what you're going to have your CPA fill out. Then there's also a small part of supplemental documents that you may need to upload if you fall into one of those categories, and we'll go over those categories in a future slide. Part 1 is the background information. This is all of the contact information for the grant and also the background information. You're going to put the qualified zone investor's legal name. That is the first question that we ask, and we ask the type of zone investor. Then you put in your FEIN or your social security number, and you fill out information about the property. There's one question on here, the amount of square footage of rehab expansion or new construction completed. That can be an estimate. It doesn't have to be exact. That is just for our data purposes. And then again, you'll see number 9 is that property identification number, parcel ID, tax ID number that you can get from your locality. You'll find the zone name, zone number, and that information on the LZA review form, and the LZA fills that out. So you'll already have that if you filled out the LZA review form with your LZA. Part 1 includes more background information. Here's where you can submit that narrative summary that is on that applicant declaration form, and then also the grant applicant contact information. This is where you'll put the information for the person that is the representative of the grant. When we start reviewing these, if we find that anything is missing from your submission or something isn't quite right or correct, we'll get in touch with this applicant representative to try to fix those things and get them right so that we can approve the grant to move forward. Part 2 is where you talk about your placed in service document. You're going to select one of the 3 placed in service documents. So if the project required a permit from the locality, you have received either a certificate of occupancy or a final inspection. That third-party inspector's report is only submitted and only eligible if there were no permits required by the locality. All 3 of those documents, whichever one you're submitting, must be dated within the current application grant year. So that's grant year 2025. Part B of this section is to explain any differences in the name and address listed on the final placed in service document from the name and address listed of the applicant. So sometimes there are situations in which a company will have a DBA, doing business as, and maybe they're not applying as their DBA, they're applying under their parent company, or they're applying with a different name. And then the company's name that they're known for, their DBA, is what's on their final placed in service document. If those 2 things are different, then we need to know that, and this is where you would put that information. There's also a place for your CPA to put that information in their attestation form. Part 3 is the itemized list of those qualified real property investments, or QRPIs. Mandy went over those, and there's a very detailed list in the manual of what is eligible and what is not eligible. You're going to list each individual category or cost on the left side and put the amount in on the right side. And the bottom column sums those investments automatically and calculates them for you. If you cannot fit all of your qualified investments in those 20 spots, you can use number 20 to type in see attachment and upload the attachment in the upload document section of your submission. And that can look like an Excel sheet that looks just like this, where you have one list with the type of qualified investment, one column list, and then another column or list with the amount. And then you would have to put in the total qualified real property investment amount yourself there at the bottom. Part 4 is qualification information. Number 1 is where you're going to put that information of the date that the real property investment was placed in service. That is to be sure that you are applying in the correct application year and that it's for that calendar year. Number 3 is the grant calculation. You're going to put the actual dollar amount of the qualified investment, and that's auto-populated from that section that we just talked about that comes over from that section. B is the applicable investment threshold based on your real property investment, and that is also automatic. So if you had a new construction, that's going to say 500,000. If you had a rehab or expansion, that's going to say 100,000. And then those are going to be different if you had a solar as part of your investment. And that's all of the information that Mandy went over. C is where you put in any amount of public grant funds received and used to fund qualified real property investments. And that's important because those funds, if they are received, they have to be listed on here so that that amount doesn't go towards the total qualified investment amount. D is your grant eligible dollar amount, and then E is calculating the grant amount. You'll see that number 4 is whether you have received any real property investment grant in the current 5-year cycle. That's because there are maximum amounts of grant that you can receive that Mandy went over in the 5-year cycle, and that's to be sure that you don't go over that maximum grant amount. Part 5 is the CPA information. When or if we reach out to you, if there are any kind of issues that we need to address or fix with the grant when we are reviewing those, we also copy your CPA on that email so that they can help as needed and be aware of what's going on with the grant review as well. The next section is where you are going to check whether you have these supplemental documents and your required documents. Again, those required documents are your CPA attestation report form, your final placed in service document, and your W-9. The final part is where you're going to upload those required documents. It's really important that you do not make the documents password protected and that you do not submit one document that has all of these documents scanned into one. We need each document separately in order to be able to review the grant properly, the grant application properly. Also, you'll see that there is a check at the very end of submission that says that you have checked that the Commonwealth of Virginia W-9 is correct and that the correct FEIN was used and the remittance address is the correct address so that you will get that grant check to the address that you intend. Let's go over the responsibilities of the RPIG applicant. The zone investor will provide the CPA with the following information, and all of this is for that CPA attestation that is required. It's a requirement for all RPIGs. So the zone investor will provide the CPA with the grant information required to complete that online application and all other required attachments, all invoices, receipts, and proof of payment for any investments capitalized or expensed by the zone investor, and also the final placed in service documentation issued for those completed investments. The zone investor will also provide the CPA with the following documents, if applicable. That's the mixed use building document, the multiple owners document, and the landlord tenant document. So for mixed use buildings, the zone investor will provide the CPA with the measured drawings for the building indicating the square footage and the use of the building. For a multiple owner situation, the zone investor applying as owners of space within a building will provide the closing documents or deed of trust indicating the building's square footage. And for zone investors applying as tenants, they will provide the CPA with the current lease agreement indicating the building's square footage. Let's go over those supplemental forms in more detail to give you all a better understanding of those forms and when they are needed. The first is for mixed use buildings that we call that Form Easy RPIG mixed use. It verifies that at least 30% of the usable square footage in the building is devoted to commercial, office, or industrial use. If there are common areas that are accessible to that space, then they can be counted toward commercial. If you have any specific questions about whether or not an area can count towards being part of the commercial space, you can reach out to us and we'll be happy to go over that with you. That form must be completed by the preparer of the measured drawings or plans for the work done in the building or the facility. The preparer of plans must be a licensed third-party architect, surveyor, or draftsperson, and the CPA will review the status of the license during the attestation process. Grant coordination. Supplemental forms ensure that the grant caps are not exceeded. If owners and tenants do not coordinate, then DHCD will determine the maximum grant amount available based on the cumulative amount of real property investment made to the property or proportion of square footage leased or owned by the zone investor. So if the tenant is the applicant, then the leasehold improvements must be directly made by the tenant, or the improvements made by a landlord or owner under a capital lease. If the landlord or the owner is the applicant, then improvements must be paid for by the landlord or owner as part of an operating lease. Let's go over some common errors that we see when we are reviewing RPIGs. Placed in service documentation is not final or indicates pending work or a failed inspection. So the zone investor must apply for the grant year associated with the calendar year of their final document. If you have an inspection that is not final, but you're working towards getting that last thing done for that inspection to be final, then we cannot accept that. You have to wait until you have your final inspection. Sometimes some localities will have an inspection that's a final inspection, but it has a list of a few small items that have to be completed. And if we do not have record that that list of items have been completed and finalized, then we can't accept that. Error 2, placed in service documentation for consecutive phases of a project were received in a different calendar year. So as a reminder, RPIG eligibility is based on the calendar year that each CO, certificate of occupancy, or other final placed in service document was received. And therefore, each CO would require separate applications. So if you are working on a project and it requires a lot of time, and let's say you start a project in December of 2025, but you don't finish it until March of 2026, you would not be able to apply for the grant year 2025 that we are currently in. You would have to wait until next year to apply. It's all based on when you get that final placed in service document. Another common error is that the application spans multiple addresses, but the CO only references one address. This is usually in the case of a facility. So for zone investors, you can only apply for work covered under the placed in service document. If the locality requires two separate COs for the two separate buildings that are part of the facility, then we would need to see both of those COs, or something needs to be noted in part 2 of that online application. And this is sometimes that part gets very complicated. It's better for you to reach out to us ahead of time and we'll help walk you through the process and figure out what needs to be done and when you'll be eligible. Error 4, differences in address entered from one year to another. It's important to make sure that the physical address is the same as in previous RPIG applications. Let's say that your company did some work on your building 7 years ago and you received a small grant amount or even a large grant amount, that part doesn't matter. And you're applying now because your company completed more work on the building or the facility. It's really important that you list the address the same as the previous years. And if you don't remember, just reach out to us and we'll let you know how it was listed so that we can get it into the system the same way. Error 5, properties improperly identified as buildings instead of a facility. So all of our grants are capped per building or facility. Building and facilities, knowing whether your project is a building or a facility not only affects the threshold amount that you have to meet, but it also affects the maximum grant amount and other things. So if you're unclear about that, please reach out to us and we'll be happy to walk through that with you. Error 6, vague or conditional items listed on the schedule of investments. So instead of something like site work, it's really important that you list the specific items included with the site work so that we can be sure that all of those items are eligible investments. Another popular one is sometimes change orders will be listed. We need to know exactly what is included in those change orders to make sure that it's an eligible investment as well. That brings us to the end of the real property investment presentation. I know that there might be lots of questions, and we're happy to answer those questions for you at this time. If you would like, you can put the question in the chat, or you can unmute yourself or raise your hand and we will call on you. What questions do you have? As a reminder, all of this information is in our Real Property Investment Grant Manual. This webinar is going to be posted on our website. You can watch the recording. The presentation will be on the website as well. Pamela, please feel free to unmute yourself and ask your question.
Yes, so we are a nonprofit and we have a subsidiary LLC that is the owner of the buildings. So, and honestly, I don't know who's going to be listed on the C of O because we're not there yet. Which entity would be the qualifying entity in that scenario?
So it's going to be the entity that capitalizes on the investment, the entity that's putting it on their tax books. So I'm guessing it's going to be the subsidiary, but I'm not sure. It kind of depends on your situation. And feel free to reach out to us and we can talk about it in more detail and be sure that we have the right one.
Okay, thank you.
Yeah, of course. I think I saw the Conaways next. Please feel free to unmute yourself.
We are on the eastern shore of Virginia, and the land here is a little different from other parts of the country. My wife is in the process of putting together a hydroponic farm. Does your grant process include raw land?
So there has to be a building, a physical building that is associated with the grant.
Understood.
Does that answer your question?
It does.
Okay.
It did, thank you.
Yes, of course. And we do have enterprise zones over on the Eastern Shore in Accomack and Northampton. So you can talk to your LZA to find out if you're within those boundaries, and we're also happy to help you with the grant process in any way. Peter, I think you were next.
Yeah, my question is about the mixed use. So our parcel is zoned mixed use, but has been commercial use for I think ever since its existence. And so we purchased the property and it's 100% commercial. Would we still need to go through the process of having drawings drafted, showing the commercial section, even though it's 100% commercial, or how should that be handled?
So you're using the end use is 100% commercial?
Correct.
Then you would not
Yep.
need the mixed use form.
Okay, great. Thank you.
Good question.
Kate, we have a question in the chat. We will submit in 2027. We should get our final occupancy documents in 2026. How many years can we accumulate the expenses? 5 year question mark, 5 years question mark. Do you want to take
do
that
this one or either way?
Yeah,
It doesn't matter.
I
to
can
me.
go ahead and take this one. So, Matt or Matthew, however you go by. So you can, as long when you receive your final occupancy documentation for anything that was done that's included on that final documentation, you can accumulate or utilize those expenses. So for instance, let's say that you did start that project in this year, 2025, but you do not get your final place in service documentation until 2026. As long as the work that is completed, the expenses that you submit are shown as work completed for that certificate of occupancy or final occupancy documentation, it can be accumulated. Now you put a question mark of 5 years. If you have, I don't know if that has to do with the 5-year cap that we were discussing. That 5-year cap is actually about the grant cap, the amount of grant that you can accumulate on a 5-year period, or the grant cap for a 5-year period. So the qualified real property investments just is a little bit different, as long as it is included in that final documentation. So we have had, especially when the pandemic hit and things, we've had different businesses or different applicants that it did take 2 or 3 years for them to complete that project, and those expenses were eligible or as qualified real property investment. I don't know if that answers your question. If you have further questions, please feel free to reach out or type. Thanks. Okay.
What other questions do you all have? Don't think I'm seeing any other questions.
I don't see any.
Okay, I think, Mandy, we have the ability to send out the webinar link to all of the registrants, right?
Yes, yeah, we'll be doing
Okay.
that in addition to putting it up. It may just take us a few days to get everything together. And just as a reminder, if you are joining us for the job creation grant or the CPA attestation, you did receive a separate email with a separate link for that. And so we should start that job creation grant webinar in about 10 minutes. So feel free to take a quick stretch break and then rejoin us for that. And as always, if you have more questions, feel free to reach out to us. You can email us at the ezone@dhcd.virginia.gov, but we will be sending out that contact information as well. And Kate has included that in the chat.
Yeah, feel free to copy and paste that. Thank you all for your time. And if you're going to be on the JCG one, we will see you shortly. Hope you have a great day. Bye.
Bye.